Ladies and gentlemen, why current borrow fees for AMC stock could trigger a major short squeeze. Thanks to intense demand from short sellers, borrow fees for AMC shares have been in the triple digits of percent. Here's what you need to know. And I think you need to know this if you are an investor in AMC. In spite of all of the recent volatility, we got a 1-for-10 reverse stock split potentially on the way. We got a court date, April 27th. We got an Amazon potential buyout. It's been a little confusing. This article, we're going to break down what's really important, what you guys need to know, how these cost to borrow rates, in which we have highlighted here on the channel extensively every single day, can lead to, quote, a major short squeeze. So let's get to it. Hit the like button, subscribe to this channel, source your comments, questions, or concerns down below in the comment section if you have not already. So I read the title and the subtitle to this article. We're going to get straight into everything you need to know. So it says, why are borrow fees for AMC so high? Due to its messy financials and status as a meme stock, AMC Entertainment seems like an obvious short bet for many traders. However, short sellers who want to bet against a particular stock must first borrow that stock from a broker, and to do so, brokers charge borrow fees. These fees are applied daily, and they vary based on the laws of supply and demand. The greater the interest of short sellers in betting on a stock, the fewer shares that will be available for borrowing, and the more expensive that stock will be to borrow. Pretty straightforward. This is exactly what has been happening with AMC stock, especially since the end of last year. AMC's borrow fees have reached the triple digits of percent, ranging from 100% to over 700% in recent months. Currently, borrow fees for AMC are around 140%, and we're going to look at the current numbers because it's a lot higher than 140% right now. It says, in AMC's case, this can be explained by several factors. A strong rebound in technology and other speculative stocks at the beginning of this year, the strong participation of retail investors in the first 2 months of this year that included record inflows of about $1.5 billion per day, and a high volume of arbitrage trades seeking to take advantage of the price discrepancy between AMC preferred equity, the APE units, and AMC stock. The planned conversion of APE units into AMC common shares, a reverse stock split, both of which were recently approved by a large majority vote of shareholders. As AMC's borrow fees reach stratospheric levels, it is a sign that there are fewer and fewer shares available for borrowing. In recent trading sessions, there were several times when there were 0 shares available. This has undoubtedly limited big short selling trades in AMC by institutional investors. Why more volatility is in sight for AMC? And then it says why I see another short squeeze in the making. So it's going to get pretty intense pretty shortly. Now let's continue on. It says this is a crucial moment for AMC. Some big changes are coming in the near term, such as the recently approved conversion of APE units into AMC common shares and a reverse stock split. However, there are potentially bearish outcomes for these events. Converting APE units into AMC common shares will have a dilutive consequence on the stock's float. This may also be one of the reasons behind the short sellers' massive bets. But AMC plans to use the APE conversion to raise cash to write down or renegotiate debt for equity at a deep discount. Ultimately, this would benefit AMC and its shareholders in the long term. Also, the reverse stock split will make AMC's share price more robust, at least superficially. It is possible that this could affect the stock's volatility in the short term. Even though shareholders voted on the 2 proposals, the company still needs to contend with a class action lawsuit in the Delaware Chancery Court that seeks to postpone the conversion. A hearing is planned for the end of April. Now, why this guy in particular thinks a short squeeze is in the making, and I think this is the most valuable aspect of this article. It's the opinions here, because opinions help you become a stronger investor. They help you to formulate better opinions for yourself. It says, in my view, there are several factors surrounding AMC shares at the moment that are leading it to the brink of a short squeeze. First, the short interest in AMC. Currently, there are $592 million worth of short positions in AMC, and about 25% of its float is being shorted. Thanks to the stock's strong performance during the first few months of this year, short sellers are sitting on losses of over 235 million year to date. Second, borrow fees are in the triple digits, and AMC has been unstable in recent months. And let me just kind of clarify something for you guys too. It's not necessarily about the amount of the float that is sold short that helps squeeze shorts out of their short positions. Obviously, that can lead to a very big short squeeze, being 25% short. But it's also the dollar amount that is currently sold short. $292 million is nothing to sneeze at in comparison to obviously the market capitalization of AMC and the losses that are incurred over a period of time. So for the start of this year, for hedge funds to lose $235 million since the start of 2023 on their short bets on AMC, with cost to borrow rates that are in the hundreds of percent ranges, they're more likely than not going to be quick to get out of those short positions, rather than what you have kind of seen in 2022, where shorts didn't want to cover on their short positions because they were making a lot of money at the same time. It wasn't like every time AMC went higher, they were more and more in the red. They were in the green. They were just losing some of those gains, right? Hopefully that makes a little bit of sense. It says, when a stock costs more to borrow, some short sellers are often forced to close out their positions and take their remaining profits, if any, before other buy to covers trigger an upward movement in the stock that could generate unlimited losses. And finally, the perfect setup for a short squeeze involves buying volume. A lot has been going on with the stock since the shareholder vote, and traders are following AMC closely, waiting for a reason to smash the buy button. That leads me to something and a realization. You need to smash the like button and the subscribe button as well, so we can keep bringing you guys this information as soon as it comes out. Like, we were literally the first ones to report to you guys yesterday about the Amazon buyout talks with AMC, and I think that is very deserving of a like on the video. Now, I do agree with this guy's perspective that is making this article. Bernard Zambanin, I'm not exactly sure if I'm saying that right. Pretty bad with last names. Sometimes they can be a little hard to say, but I do agree with what he has to say, right? And I feel like I have a little bit to add to that and give my twist on it. I feel like that is appropriate right now because I think, yes, the cost of borrow rates being high, that is a good thing. Shorts losing $235 million since the start of 2023, also a good thing. But on the other hand of this, we don't know what's going to happen in the court system. And I think there's a lot of shorts that are short on AMC that would not be short on AMC if this arbitrage trade never existed. Now, when you throw the Amazon situation in the middle of that, Amazon could potentially buy out the stock and cause shorts a lot more stress and losses than they would have otherwise felt, right? If this wouldn't have happened, or if Amazon does inevitably buy AMC, that's not a situation shorts want to be a part of. That's not something where they're going to win. So I think that adds a little bit more fuel to the fire to get a short squeeze. On top of that, I do think a lot of people underestimate the support and attention that AMC does get. Yesterday, when you got that news that AMC was potentially in talks with Amazon for Amazon to acquire them, that in about 15 minutes was the top trending article on Bloomberg. It's not all retail investors that are paying attention to this name. And like he says, the last sentence of this article, people are literally waiting around to smash the buy button, and people want to be a part of this trade. Institutions and hedge funds want to be a part of this trade when a short squeeze actually does come, and it's going to be like a winner takes most kind of situation when it comes to hedge funds versus hedge funds. Hedge funds will squeeze other hedge funds. That's the name of the game, and that's exactly what's going to happen. So I think for all of those reasons that I stated, there's a very real chance here of seeing an imminent short squeeze. On top of that, you got to look at the business fundamentally and think about the court date, April 27th. Sure, if the courts say this reverse stock split cannot happen, fine. That in the short term would be very bullish because there's a lot of the short interest that is short on AMC that would otherwise not be short on AMC. Kind of explained that already. But if it does go through and we do get a reverse stock split, things I talked about here in this article, well, every time AMC has raised capital, the stock has actually went higher, and that is because fundamentally the company is getting better, and fundamentally you're only really short on a company unless you think, one, there's fraud going on, or it's overvalued, right? And you have a reason to short the name. Well, when something like AMC has fallen so much that fundamentally it doesn't really make sense to be short on AMC. All things considered, box office should be better in 2023 than 2022, aka fundamentals are improving. And the stock has fallen so much, it doesn't make a whole lot of sense to continue to be short in that name with all these underlying factors that are currently going on. Now, for when we're going to squeeze or how high we're going to squeeze, that is anyone's guess. But what I will tell you is the current cost to borrow numbers that we are seeing with Interactive Brokers is 247.83%, 10,000 shares that are currently available to be lent out. So cost of borrow rates continue to spike higher just over the last couple of days, going from about 200%, 214%, 211% around March 23rd. You're now it did hit a high of 281%, now at about 247%. So cost of borrow rates are continuing to go higher, and really, in theory, after March 14th, this should not have happened. You're also looking at a live short interest of free float at 25%, and the amount of shares currently sold short sits at about 129.37 million. With the cost of borrow average, this is across all different platforms. Interactive Brokers is included here with Ortex, so we like to look at that one as well, but they tend to cater more towards like institutional investors. They tend to cater towards them a little bit more, so they tend to have cheaper cost to borrow rates than the industry. And the industry average right now is sitting at about 356.8% cost to borrow average, cost to borrow max at about 435%, cost to borrow minimum, the last real update we got was around 115% for that cost to borrow fee. So for all of the reasons that we have talked about here in this video, it looks like a short squeeze is not only possible but probable, and really it's just inevitable. But when does that happen is, I think, a bigger question here, and that's why I will start to pay a little bit more attention to some of the option activity that we are seeing, and specifically where you are seeing the bullish positioning at. For specifically September right now, it's looking pretty bullish on the option chain. Some of these large orders that are coming through, definitely looking pretty good. So we'll talk about this more over the next coming days, weeks, and months. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and hit that notification bell if you guys want to stay up to date with all of these videos every time they are posted. You want to make yourself and your family money. That is going to do it for this video. Thank you guys for watching, and I will see you in the next one.